One of the questions I was going to ask you was the primary differences between the private and public real estate markets and how investors can leverage both for optional, portfolio diversification.
Sure. So part of what I talk to clients about is how to create a real estate portfolio that includes both. And there's different reasons to focus on different property types and different vehicles. I actually just gave a presentation to a group of women just before this about on this very topic. So when we think about investing through the public markets, it's a lot about getting access to property types that may be difficult to get access to through the private markets, either because you just need so much capital to get into them. So things like a casino, which may be several $billions for one property, or things like data centers, both of which also have a lot of regulatory barriers to entry, as well as just space and environmental barriers to entry. Data centers are an example where we just don't produce enough power right now in a lot of markets to build more of these data centers, even though there's huge demand for them. So in the private markets, it's really hard for an investor to get access to them. Even if they have, let's say, tens of millions, you need hundreds of millions or billions. But through the private or through the public markets, you can invest in a REIT that owns these data centers and get access to them. So it can be part of getting access to more niche property types or more specialized, harder to access property types. But it can also be about kind of portfolio completion strategy. So in the private market, maybe like you guys, we own industrial properties and retail properties through either direct ownership or maybe through a fund. But then we can also add in some of these more specialized property types to even out returns, get exposure to those property types, and also get exposure to international markets that are much harder to get access to if you're based in the US, to either invest with a sponsor there or certainly to buy your own properties in another country. So for all those reasons, using both of those different kind of vehicles can really make sense for retail investors or even institutional investors. Both groups use that strategy of both listed and private real estate.
Yeah, no, that's really good.